All right, so you know what's got everyone talking? It's this whole idea about making those investments that aren't your usual stocks and bonds, the private ones, available to, well, more of us, really.
Yeah, seems like it's everywhere, right?
And we've got a couple things to dig into today. First, there's this document, SCR 2250401-MJXV.PDF.
Catchy title.
Oh, absolutely. And then there's this news article titled, BlackRock CEO touts private assets for regular Americans.
So basically, why is this happening?
Exactly. Why is this shift even a thing? What could it mean for, our wallets?
Yeah.
And what are the big things we should really be thinking about? That's what we're diving into today.
Okay, let's do it.
So this is all pretty high-level stuff, right? But what about the everyday person, someone like me? What's the big idea here?
Well, the big name here is Larry Fink.
BlackRock, right?
Yeah, BlackRock CEO.
Yeah.
And his voice kind of kicks off the whole conversation.
Okay.
So the idea is basically, looking beyond those traditional public markets.
Like our usual 401ks and stuff.
Right. And the exciting part, it's about how this could change things for individual investors, for people like you and me.
So let's talk Fink for a sec.
Yeah.
Why is he so gung-ho about this whole thing? What's his main point?
He's saying private assets, things like private equity, real estate, and infrastructure could be, really important for making our finances better, especially for retirement.
I mean, that's what we're all thinking about.
Right. And these assets, historically at least, they've shown they can maybe give us higher returns. And get this, they might also give us diversification that isn't totally tied to how the public markets are doing, whether they're up or down.
That's huge.
Is.
But, okay, real talk. Haven't these investments always been kind of, out of reach for most of us?
Mm-hmm.
The article even said they're locked behind high walls.
You're right. You hit the nail on the head. There have always been some big roadblocks. You usually need a ton of money to even get started. Mm-hmm. And then the way these funds are set up, super complicated.
Definitely not for beginners.
And then there's liquidity. It's a big one.
Meaning?
Well, you can sell a stock super fast. But if you own a piece of a private equity fund or a chunk of some infrastructure project, selling that, it could take forever, months, even years sometimes. Not exactly quick cash.
So how are these walls coming down then? What's changing to make these things available to, well, normal people?
We're seeing a lot of cool new stuff popping up. There are these new financial products and platforms, and they're trying to lower how much money you need to start investing. So you don't need to be a millionaire.
That's great news.
And there's a big push to make things more transparent. How are these assets actually valued? How are they traded? People want to know. And there might be more ways to cash out, make things a bit more liquid in some areas. For example, maybe some new kinds of funds where you have more flexibility than those traditional private equity ones that lock up your money for ages.
Gotcha. So this all seems to be happening when the classic 60-40 portfolio, the stocks and bonds mix, is maybe not looking so hot. Future returns might be lower. So how does that tie into this whole move towards private assets?
That's a big part of it. When people see that maybe they won't get as much from the usual markets, they start looking for other ways to grow their money. And private assets, well, they've done pretty well in the past, so people are looking at them as a way to maybe get those higher returns again. Makes sense, right?
It does.
No.
But when we talk about private assets, what are we actually talking about? Can you paint a picture?
Okay, so private equity. Think of it like you're investing in companies before everyone else can, before they go public. And the idea is you're helping them get better, improve their business.
Make them shine.
Exactly. Then there's private credit. It's like lending money, but to these private companies. And then you've got real estate that's privately owned, and infrastructure.
Infrastructure, like what?
Ports, those massive data centers, power grids, stuff that basically keeps our whole economy running.
Essential stuff.
Exactly. But here's the thing. Each of these things has its own level of risk and its own potential reward. It's not one size fits all.
I was just going to say, there's got to be some downsides too, right? What are the big risks for us regular investors if we decide to check out these private assets?
Absolutely. I mean, first off, these things can be way more complicated than just buying a stock. It's a whole other ball game. And remember how we talked about liquidity? Yeah, they're not easy to sell quickly. And then there are the fees.
Oh, right, fees.
Yeah, they tend to be higher with private assets. So you really got to be careful. You got to understand what you're getting into. Even Larry Fink himself, he says, we need more transparency, better technology to make sure investors are protected and they know what's going on.
Makes sense. So the article mentioned that in some other developed countries, people have been able to access these types of investments for a while now. Is that important for us to know?
It is. It means this whole idea of making private assets more available in the US isn't totally new. Other countries have figured out ways to make it work, so we can maybe learn from them, see what's possible.
So what's the big takeaway for our listeners today?
Okay, so opening up these private markets could be a great opportunity. You might be able to get better returns and make your portfolio more diverse, but there's a but.
Always a but.
There's definitely some tricky stuff, too. It's more complex, it's riskier, you got to know what you're doing. It's not about ditching your regular investments, it's about maybe adding another layer to your strategy.
A new piece of the puzzle.
Exactly.
And that brings us to the final thought for everyone listening. As these lines between what's public and what's private kind of get blurry for investors like us, what new questions should you be asking? What should you be thinking about? Especially when it comes to your own investments, how much risk you're okay with, and the idea that you might not be able to sell something easily if you need to. Thanks for joining us for this deep dive, everyone.
See ya.
See ya.